Got another fireside chat for you now. Here, you're in the global trends track, sponsored by Bidstack. I'd like to welcome our next fireside chat. This is from the Stillfront Group, who've grown from $20 million to over $2 billion market capitalization in 5 years, mainly through mergers and acquisitions. So we've got a couple of speakers here. We've got Shum Singh from Agnitio Capital and Alexis Bonte from Stillfront Group. And we're coming in. I can see my stage manager, James, is bringing you guys in. Shum, welcome. Alexis, welcome.
Hey, how are you, Dave?
Yeah, I'm all right, thank you. I'm good. Stuck at home. I feel like I've been sat in this chair without moving for a while now. But it's great to see you. Great to see you on screen. Hopefully, it won't be too long until we get a chance to raise a glass in person, I hope. But look, I'm going to let you guys crack on with your fireside chat. Folks, if the people watching, if you have questions for Alexis and Shum, please do drop them in the window there, the Q&A box at the bottom, and I'll come in later on and help you folks curate that. But for now, over to you. Looking forward to it.
Great.
Hi, Dave. Thank you very much.
Great. So, Alexis, welcome. Always a pleasure to have another fireside chat with you. I'm going to just briefly make a quick introduction on myself in case some folks out there don't know who I am. And then, Alexis, you could do the same, and then I think we can just dive into some questions that I've had for you. So I'm Shum Singh, the managing director and founder of Agnitio Capital. We are an investment bank, fully authorized and regulated, based in London and in Seattle. We are exclusively focused on the games industry. We've been around for 16, 17 years. We've done lots of transactions in the game space. We've sold companies to the likes of Ubisoft, Nexon, Gameville, and of course, on 4 occasions, to Stillfront Group. One of the transactions that we actually had the pleasure of advising on was eRepublic Labs, which Alexis Bonte previously was the CEO and founder of. After that, we also had the pleasure of consummating 2 other transactions with Stillfront. And most recently, we advised Candywriter on its sale to Stillfront Group at the end of April, and the deal size was up to $195 million if you include those potential earnouts over the years. So as Dave kind of mentioned briefly, this talk is really going to focus on Stillfront Group's rapid ascent over the past 5 years. From humble beginnings, listing on the Swedish Stock Exchange, and initially receiving a market cap of only $20 million, and now exceeds $2 billion in market cap. So one of the fastest growing and most successful and best performing stocks on the Swedish Stock Exchange over the past 5 years. So with that, I'm going to now pass over to Alexis, and please introduce yourself.
Thank you, Shum. Great. Thank you for the introduction, and thank you to Pocket Gamer for a first for me, which is a fireside chat, completely virtual, which is really, really weird. I don't know if Shum's wearing any pants. I'm wearing pants, I promise. It's really. I'm sure this is a joke that's been made 100 times already during this call, but this is really weird, but fun as well. I hope we can make it entertaining and interesting for everybody. Really quickly, I'm Alexis Bond. I'm the Group Chief Operating Officer of Stillfront. Previous to that, as Shum said, I was the co-founder and CEO of eRepublic Labs, which was one of the pioneers of free-to-play, first on browser. We started in 2007 and then pivoted to mobile. And I think, transitioning to what you said about, humble beginnings, and kind of, I think humility is definitely one of the core values that we have at Stillfront. We really don't see ourselves as a 2 billion, market cap type company. If you think about it, we're all founders that have started from nothing. Republic, we started, it was myself and 5 other people in a small office. No idea about how to design games. Most of the guys had no idea about how to develop games. I think we did eRepublic.com, the initial game, in 6 months after you went live. We were hacked and there was Pokemons all over the game. We really go from that. I think you'll see a lot of the studios over time that have joined the Stillfront family. We're now 14 studios. It's all studios that were, where the founders have had a similar kind of trajectory. We've had lots of ups and downs, successes and failures. And it's people that just know how hard and difficult this business is, but also how exciting and incredible it is, and how much you can scale once you get things right. So I think that's really kind of the origins of Stillfront. I've been part of Stillfront for only 3 years, so I cannot take any credit for the $20 million to $110 million market cap jump, because that was the market cap, the joint market cap of Stillfront and New Republic when New Republic joined joined forces with Stillfront. I think we're the 5th studio to join Stillfront. And then the past 3 years, I mean, really what we've been doing is implementing our strategy, which is, really having this decentralized alliance of studios that's an entrepreneur platform, and just letting entrepreneurs be entrepreneurs, letting them really kind of, run what they're doing. And that's really what we've been doing. And always keeping that humility and never forgetting, as you're saying, the humble beginnings, because that was, keeps you straight.
Yeah, so that's really interesting. I mean, you kind of mentioned being really, entrepreneur friendly, understanding the perspective of being a established and sort of battle tested studio over the years, because it seems that those are the kinds of studios that you've been pursuing and looking to add to the existing family of studios. But I think it would be great for particularly the audience to maybe describe a little bit more in detail how you actually acquire these studios and leverage the centers of excellence that you mentioned, or functional areas of expertise within the Stillfront Group family.
So I think one of the reasons we're performing well, I think, as a stock, is because we are really strong believers in fundamentals. We think fundamentals count and are really important. And if you look at it, we are profitable as a group. We're very profitable as a group. We have organic growth, not just M&A growth. We really kind of believe in these sort of things. And if you look at all of the studios that join the family, they're all profitable studios. They're all studios that have been able to find a niche, find something that they're able to specialize at and be very good at. Not all the studios were always profitable. Republic Labs had years where it was profitable, years where it wasn't profitable. But after making many mistakes, we find our mojo. And one of the mistakes that a lot of the studios usually do, especially the VC-backed studios, Republic was VC-backed, is, of course, VCs will, really push you to go bigger and bigger and bigger and bigger and get more people and invest more and all that. And we had found something that we're really good at. We were very good at doing strategy games. And then, because we want to grow faster and bigger, we thought, okay, we start going outside of our DNA. We started going outside of sort of games that we know how to make. And that's when we started failing. But when you're a large company, a large group, you do need to have a portfolio of games and a portfolio approach. So what we did is we started working again when the studio started functioning well when we focused on what we knew how to do well, which was strategy games on mobile, 4X games, one after the other. And a lot of the other studios that we've acquired have gone through the same thing, but there is a moment where you do reach a certain maximum, but when you're doing kind of the same thing over and over, there's a moment where, okay, you need to how do I get to the next level? And usually that's through talent. And the way you do that is, there's several ways you can do that. You either, try and hire that talent and try and do new studios with the new DNA and start from scratch. And we've seen that doesn't work. That doesn't work very well. We've seen many large studios, try to do that. Or you become part of an alliance like Stillfront, where basically those other studios have some of that knowledge. And then to go to your point about centers of excellence. So for example, Good Game Studios is a studio that is extremely good at doing user acquisition. They're very strong. They've been investing, in their team to do UA for a long, long time. And some of our smaller studios across Stillfront maybe didn't have such a strong user acquisition team. So basically what we do is we encourage collaborations between, some studios at Stillfront that didn't have a UA team to work with Good Games UA team. And then basically Good Games is not obliged to take the games from those studios, by the way. If the KPIs are not sufficient or they don't think they're good enough, they won't take it. But if they are good enough, then they start working with them. And then you see great results. And UA is just one of the examples. We have other studios that maybe, are located in areas where it's difficult to have a lot of good graphic designers and do lots of, video ads or that sort of thing. So Babel and one of our studios is able to create a top quality Pixar-like ad video, cartoonish ad video in the week for a very small budget. So they will provide that service to other studios. And we have right now, I think we've started, since we've begun, about 50 collaborations across the different studios. And 40 of those collaborations are still live. And that really kind of helps you, scale to the next level.
Great. I want to kind of focus a little bit now on more sort of what's been driving a lot of the consolidation. And obviously, there's a number of factors contributing to that I'm sure you have a view on. But also, now that Stillfront is a $2 billion market cap business, I mean, you're a large, somewhat of a larger player now. Do you see competitive forces now when you're evaluating other potential studios to acquire? So obviously, it probably makes more sense to be acquiring larger studios rather than smaller studios. So if you could please comment on that, on sort of what's your evaluation criteria? Yeah,
so we're always on the lookout for great studios to join the family all the time. I think, Marina, who's our head of M&A, is, as you know, very, very active, and she's a very strong M&A specialist. We have probably a pipeline, we've seen through our pipeline now probably close to 1,800 studios. Out of those, we probably, enter into talks with a few hundred studios. And then, then we probably would go into deeper talks with maybe 100, 120. And we've only acquired, well, since I'm part of the group, 9 studios. So it's a very, very selective process. The size of the studios and the size of the transactions that we've made have indeed become larger recently. But that's not our primary concern. We're more interested about other things. We're more interested about culture fit. So you talked about the value of humility and the values of entrepreneurship. If we feel that a studio is not very large, but it's got an incredible entrepreneurial team, maybe their portfolio of games adds up to the portfolio of games that we have, and so that's an interesting fit. Right now, for example, we're very interested in sports games, something that we're looking at very carefully because we don't have that many sports games in our portfolio. There's other areas that we're interested in. Recently, we didn't have any casual games. We expanded into casual games in what was a large transaction first with Stormate, and then another fairly large transaction with Candy Rider. But so really, it's more about team, culture fit, and if it makes sense in terms of the portfolio fit, then that will be really the priority. Then in terms of size of deals, really, it can be any size. Of course, if we ideally, we do want the studio to be making a few million euros or dollars of revenues, and and close to $1 million in profit minimum, because that shows that you've been able to reach a certain level. But we don't really have a minimum, and well, the maximum really depends on. We've bought larger companies than our own group before. That's what we did with Good Games. So there's really the criteria is really about the quality.
Sure. Good. Then we don't have so much time left. So I'm going to ask you a kind of more forward-looking question. So obviously Stillfront's had a pretty phenomenal ride the past 5 years. It's a darling of the Swedish institutional investor market. Where do you see Stillfront in the next 5 years at its 10-year anniversary?
So I think one of the things that we're going to do is we're really building. If you look at Stillfront today, it's about 850 people across 14 studios, and we're only 14 people centrally. So 14 people at the central group of Stillfront are able to operate that. And the reason we're able to do that is because we have a very decentralized approach that is really, based on trust. Of course, there's governance, and we check everything and all that, but it's kind of really based on trust in entrepreneurs, and really allowing the entrepreneurs to run their studios just as before, except with more means, access to more information. So, and the reason we've built it this way is actually both Jorgen, who's the CEO, and myself, we had experiences before Stillfront where we tried to build large companies. And I was one of the founders of lastminute.com. He was the founder of another public company as well, that were a lot more centralized. And we realized that when you're building a company that's very centralized with a big, kind of middle team, it works at the beginning, but then everything slows down. And then as you're growing, it just becomes more difficult and more complicated. I think that with the decentralized approach that we have with Stillfront, we could very easily have tomorrow 18, 19, 20, 25, 30, 35, 40 studios. Mm-hmm. There's really no limit to the number of studios that could be part of the family with this kind of decentralized approach. Of course, we use technological tools to make sure that the glue works and all that. So quite honestly, if I look now, 5 years down the line, I think we're continuing to execute on this strategy. We're growing quite a lot. We're probably also doing a few things, is leveraging some of our studios who have the ability to acquire assets rather than just companies. So if there's companies out there that have, existing games that maybe they want to pass on, they want to move on to something else, so they don't have the live operations team to do it, then we could also acquire assets. But just, continuing to grow and continuing to have fun in this wonderful industry that's we're very lucky, all of us, to be working in.
Great. Then I think we have literally a few minutes left. Just one quick one, because obviously you mentioned that a lot of, you've been pretty aggressively acquiring studios and at a pretty rapid pace. Do you guys ever fear that there's not going to be, and you mentioned, you're a pretty lean and mean central management team of only 14 people. How do you handle post-merger integration, and can that actually become a more, difficult or just a more pressing issue to worry about? Because you mentioned, in the next 5 years, you could be at, 25, 30, 40 studios. And how do you manage from just such a small central team, all of these studios?
Well, that's the beauty. We don't integrate. We don't integrate. Of course, we do have the the kind of the checks and balance in terms of finances and all that, and we do all that sort of work and all that. But there's no forced integration. There's no need to go into a common technical platform. There's none of that. I mean, the integrations that we have really are centralized data analytics. So basically, each studio can keep its own data analytics system, and then we make that connect to a central data analytic so that we can have benchmarks and compare all that sort of stuff and all that. But then, we don't integrate. We let studios run themselves. The way it works is we have, I have business reviews with, all of the studios, once per month. And quite honestly, the process is lighter than the sort of reporting I had to do with my VC investors. Why? Because I'm an entrepreneur. I know what an entrepreneur needs, and I know what an entrepreneur doesn't want, and and that's somebody in his back all the time telling him what to do or what not to do. What he wants from me or from Jorgen or from other people is just to get rid of obstacles in front of him, and that's what we focus on.
Great. So yeah, I think we have some questions here, so I'll wait until Dave reappears on our screen. There he is.
Hello there. That was great, guys. Fantastic. Thank you. Yeah, we've got a handful of questions here, which I can just grab from that Q&A window there and put to you. That was great and very interesting. And obviously, you've sparked some imagination there of the people listening, because someone's immediately, the top question is, can we be your Studio 15? That was
yeah, I think that's from Alyosha.
Yeah, that's right. Yeah.
Yeah, Alyosha, sure. I mean, just send me an email to alexis@stillfront.com. it's probably a good idea to hire Shum to advise you, because he'll be quite good at that. And he knows exactly what we're ready to accept and what we're not ready to accept in a deal, because he sold 4 companies to Stillfront, and you'll be Studio 15.
But that's a really good point, actually. And you've raised something there, which is how people that are looking for an opportunity like this, looking to be acquired by Stillfront, looking to become part of your family. What's the perfect way to approach you, and what are you looking for right now? If you had to kind of nail down what people have to do in order to be ready for you. Yeah,
so I think a lot of studios underestimate what is necessary when you're going through a sale process. They underestimate the amount of due diligence necessary, what they need to do in terms of what we call the data room that you need to have prepared, with all your KPIs, game by game, and all that sort of information, all that. So my recommendation is if you're serious about selling, you need to know as an entrepreneur that that's going to be your main focus probably for the next 6 to 9 months. If you don't have a very strong financial function, definitely go for the help of a banker to help you advise you, how to structure things, how to present your business in a way that that sellers are used to seeing that information, so that the thing goes a lot faster, and quite honestly, so that sellers take you more seriously, that they know that you're serious about selling. Very often, I get, because I have a lot of friends in the industry, a lot of entrepreneurs are friends of mine. They're kind of like, they want to talk to us and to try it out. The thing is, there's a lot of other people that actually really want to sell their studios. So if you just want to talk to us to see if you're interesting and all that, you're probably going to waste your time and our time. But if you're serious about it, then reach out to us. We'll give you feedback about what we need, and probably run a competitive process to find a banker that works for you. Probably try and identify who you think the ideal buyers for you are, that you think make most sense for your type of studio, and then look at what bankers have done deals with those buyers, because that's going to be the fastest way to do it, quite honestly. Because again, as I say, they know what the buyer is willing to pay.
We've got a few more questions here, and we'll make time to go through them. So Chris asks, games M&A seems to has largely survived the COVID lockdown this year. Do you think this can continue for the rest of 2020 as we face a recession, maybe the economic tailwinds of the current situation?
Go ahead, Shum. Yeah.
I'll make a quick point, and then Alexis, I'm sure you'll add something very interesting. And speaking from obviously just completing a transaction with Stillfront just very literally a month ago, and actually currently executing other deals, I think that if there was an existing relationship in place prior to COVID, then a lot of those deals are just going to continue. And that's just a matter of timing. In terms of potential businesses that haven't met let's say a universe of buyers, but as long as they're established and well known, I definitely still think that those companies aren't going to get interest. Maybe they wouldn't get as the same level of interest from the physical contact that they would have had, but that doesn't mean that there's going to be a lack of interest out there. Just because if you're an established business that is profitable, that is growing, that has demonstrated certain expertise or a niche market understanding, then you will always be attractive, irrespective of whether there's a recession or not.
Yeah. I think the only thing I'll add very quickly to what Shum was saying is I think we were able to close Candy Writer during COVID because we knew Kevin and Nadir for many years. We met them at a dinner that actually Shum organized something like 18 months ago. We met them again. I visited their studio in Miami in December. So that's where we were able to close the deal, in COVID. To be fair, any studio that we haven't met with face-to-face, we've hired people to Stillfront without meeting them face-to-face via Zoom, which was weird. I think a large M&A deal would be very hard to do without a studio visit because the culture fit is so important that I personally would be uncomfortable in doing an M&A full-on till the close without having met the team, gone through the studio, felt the pulse.
Yeah, that makes sense. And it also goes to show, I think as someone who organizes conferences, the importance of being able to meet someone in person, right, and have those business connections. But in the meantime, we get by. Another question here is the M&A market is very competitive at the moment. What do you think Stillfront can offer in particular?
Yeah, so I think it's super easy. We have a few advantages. So A, we're a public company, a Swedish public company, so we're as transparent as you can get. Like, we're very transparent, straight shooters. What you see is what you get. You want to see what a Stillfront acquisition deal looks like, look at our press releases. They're the opposite of American press releases where you don't know how much they bought it for, what happened. Everything's laid out for you to see. So I think that's one of the things is the transparency. The second thing is the flexibility. We're very flexible and very adaptable to what a studio needs. And then I think the secret sauce then is really what I was saying before, the fact that we are truly completely decentralized. The owners of Stillfront are the entrepreneurs in the studios. Many entrepreneurs, many studio founders right now that joined Stillfront have more shares than I have or than Jürgen has. You know, the true owners are really the studios. And that makes for a completely different DNA than other like large groups. Of course, a lot of the rest is public, but the main shareholders, individual shareholders, if you look at it, really are the individual studio heads. And so this decentralized approach, I think, is really makes it very different and very unique. So basically, if you're an entrepreneur and you would like to get you'd like to get the exit, you like to get that money, but games is your life and your company is your life and it's what you like and you want to continue with it and just get to the next level, I think we're the best choice out there. If you're an entrepreneur and you want to get as much money as you can short term and and go and live on a boat and never do games anymore, then we're probably the wrong choice.
That's a good answer. That's a very honest answer. And actually, I have a question for you on that. Are there advantages of being part of Stillfront Group in terms of kind of knowledge sharing and being members of the, although there's a disparate, you say that the decentralized culture, but are there opportunities in terms of knowledge sharing between members of the group? Is that an advantage of being part of Stillfront Group?
Yeah, and it's a huge advantage. If you look at all the, and anyone who has access to App Annie can look at the studios that when they join Stillfront and after they join Stillfront, and they all have the same thing in their organic growth. It just goes like this. And what it is true, no bullshit benchmarks and share of information. We all have lots of friends. We all go to your conferences. Everybody shares information, and we learn a lot of things, and that's really helpful. But how much can you trust the data? How much can you trust the data? When you're part of the same family and all working toward the same goal, when somebody tells me, hey, this is what's working for us in terms of live operations, and this event and this piggy bank is working super well. Show me the data. Here's the data. This is how we did. This is how it works. It's extremely powerful.
That's wonderful. Well, look, thank you guys. We have a couple of questions in the window, but we're out of time. So what I'm going to suggest is that if people do have things they'd like to ask Stillfront Group or Agnitio Capital, they should maybe find you in the meeting platform or I'm sure your contact details are out there. I want to thank you very much for taking part in this. I'm going to give you a round of applause. You're going to have to imagine that coming from all the other folk around here. Thank you, and hopefully we'll get a chance to see you folks in person at our next event and have you part of our Pocket Gamer Connects family again. So thank you. Thanks, guys.
Thank you.
I'd love to. Thank you so much.